Yo, so uh, welcome to chapter three on market profiles. First of all, I'd like to say congratulations. You made it this far. It's 3 weeks. If you've been putting in a bit of time a day, eventually you'll get it. You'll start to understand. Today, we're going to be going over market profiles, which offer a dynamic perspective. So, this just means it gives us a way to look at the price action on the chart. If you look at the chart, we can see that um, over time prices moved, right? Some movements have different characteristics, and we can use these characteristics to create profiles. If we start with market profiles in their simplest form, we begin with a range and an expansion. So if we look at the graphic here, you can see a sample line chart. So imagine instead of candles, price action could be represented by a line with certain price points. So in this case, we can see here, we have a range, then we have an expansion, then we have a range, and we have an expansion. We also have a range, and we have another expansion. Notice how price went down, and we call that an expansion. Price went up. We also call that an expansion. An expansion isn't necessarily up or down movement. An expansion is a swing to new levels or to previous levels. So that would be a swing to new levels above or a swing to previous levels below. That's what simple market profiles are. Uh, it's just a basic way of looking at the price or looking at the chart and organizing uh, or visualizing the chart logically. So price can be either range bound, meaning we can stay within a higher low, or it can expand to a new level, whether that's higher, as you see here, or lower, as you see here. Market profiles begin with a range. So when we're looking at the chart, if we see here on the left, let's say we were trying to look at mark up the simple profiles, we can say we have a range here, and then we have an expansion here. So if we go red since we're going down, and let's do gray since we're bouncing around. So you can see we have our simple market profiles. All right, so I just want to take a few moments to discuss simple market profiles in general. We're looking at a range here on the left and an expansion as well, or an expansion lower to be more specific. When it comes to ranges, you can see uh, price isn't always going to touch the top or touch the bottom of the range. For example, if we mark the low of this area, so from here to here, if we look for the high and then we look for the low, we have our range. But as you can tell closely, price had its own pivot points. within the range. If you look at the expansion, we have a bit of a pivot here before continued downward movement. So you can see that the range has a particular shape to it, and that comes from the sideways movement. So that's how you want to think of a range. It's a sideways movement. Even though we had some swings inside, overall, you can say we pretty much just went from left to right. Whereas here we went down, or here we went up. Those are the two basic things price can do, or three. It could go sideways, it could go upward, or it could go down. That's the basis of market profiles, and it comes from a simple logical framework. You're going to notice that a lot of what we do stems from these concepts. So you want to take the time to understand market profiles, and don't move on unless you understand what I'm saying here when I refer to simple market profiles, which are ranges and expansions. And if we move around the chart, the Bitcoin chart, we can see all different types of expansions. And we can see all different types of ranges. Depending on the time frame that you're choosing to work with and the given time frame alignment based on the intervals you choose, you might see that the two simple market profiles can take shape in different forms, but overall they have the same characteristic. So you can see from here to here was not much of an increase despite the large swings. So this price here practically moved sideways during this time frame. So that gave us a range. Here we started below, and then from this point in time to this point in time, we had a sharp increase in price. So you can't really say that we moved sideways from here. We moved upward. So this would be an expansion. So this would be our expansion upward, so we'll mark it green. And this would be our range, so we'll mark it gray. That's a range here. Range and expansion. All right. So those were the simple market profiles, ranges, and expansions. Uh, Advanced market profiles also include retracement and reversals. So a market profile ordinarily begins with a range that leads to an expansion. So in this graphic here, you can see we have three different scenarios. And these are the only three possibilities, logically speaking, based on the framework that we've created. So we have a range that starts the profile, then we have an expansion. We have a range, expansion, range, expansion. This could also be an expansion downward as well. So there's no difference between an expansion upward or an expansion downward. They're both considered expansions. So uh, after an expansion, um, a retracement, a reversal, or another range can occur. So after an expansion, we have our three different scenarios where it begins with a range, and then we have an expansion. And then our first scenario, we have a retracement, which is where price goes down and then back up, or up and then back down. And then we have a reversal, which is where price goes towards the opposing end of the previous expansion. Or we can have a range. The only possible outcomes after an expansion are a range, a retracement, or a reversal. You won't. These are the only possibilities based on the framework that we operate from. Okay, so um, next, I just want to cover a couple of concepts uh, with advanced market profiles. So, not necessarily looking at the chart, but just looking at these images here that I prepared. So, as we said before, a market profile ordinarily begins with a range that leads to an expansion. And we've said that an expansion can either be up or down. So, from this point at the end of this range, it can either go up or down. That's what this means. This means that after a range, we can either have an expansion up, the plus, or an expansion down. That's what that means. So, consolidation phases will not occur twice in a row. So, we won't have two ranges in a row. If these were together, it would just be one range. So, this would be like one, the range over the course of a day, the range over the course of another day, or the range over the course of a week, and the range over a course of another week. You want to distinctly define the time frame of the range that you're working with. The only possible outcomes after an expansion are a range, a retracement, or a reversal. So we've defined our simple market profiles as range and expansion. Logically speaking, the price can go sideways or it can expand up or down. And then after that, it can either go sideways again or it could retrace, which means if we had an upward expansion, then we go down before we go up again. If we had a downward expansion, we would go up before we go down again. And then finally, uh, after an expansion, the last possible outcome is a reversal. So if we have a range, then an expansion, we could have a reversal where price goes towards the opposing end of the previous expansion. The market will rarely experience one expansion phase after another. As before, I mean, we could have 2 consecutive days of price expanding upward, but most likely that's going to be a part of a weekly expansion upward. So you just want to make sure that you have the right perspective and that you have your time frames aligned, so that way you don't mistake where we are uh, in the day or the month or the week. You want to keep the time frames aligned, so that way you can clearly see the market profiles, and you can gather what the structure is currently. All right. Next, I just want to take a look at retracement profiles. Following a retracement, the market can either experience a range or an expansion. We can see the retracement. It's where prices at a certain point, we have movement one way and then retracement back to the same point. And then in this scenario, we ended up with the range. We have something similar happen. Price moves downward and then retraces back to the same point, except during this scenario, we have an expansion upwards. In future chapters, we'll go ahead and cover how to try to catch moments where it's likely for price to expand upwards instead of range. So that way we can maybe take advantage of this type of movement. But that is dealing with other concepts that we'll learn later on in the mentorship. If we look at the chart, I mean, we can see all types of price movement, and we can see many points where price retraced. For example, if you take a look here, we have an expansion up to this point, and then you can see we have price go down, and then price retraces. So you can see there's a retracement right there. If we just go through the chart, we can see other places where price had retraced. So, for example, we have yet another similar looking section where we have an expansion upwards, and then we have, oh, sorry, wrong thing. And then we have a retracement. You can see another spot. Let's look for something else. Okay, so we can see this one here is a little bit different, but um, same concept nonetheless. We can see we have an expansion downwards, but let's see if you can spot it before I mark it. Take a few moments to see if you can see where the retracement is. If you said here to there, you're right. You're right. I would even accept something like this above it. You're also right. It's technically the same thing. They're technically the same. Except the key point is here. So the important thing to remember is that price, if we zoom in, we can see. The important thing is that we know price goes from here to here. That's a retracement. Doesn't necessarily have to cross, but that's the retracement. The point when it comes to uh, when it comes to the point after the expansion, you see price move and then returns to around that same point. If we move over to one of these earlier examples, the retracement is here. And as you can tell, after this price retracement, we had a range. So we had an expansion upwards, and then we had a range. So um, if we saw this expansion, we saw this retracement, and then we saw this range. After a range, we could potentially anticipate this next expansion. And as you can tell, price expanded pretty aggressively upwards. So the goal is to spot scenarios where we identify these market profiles, and then we try to find moments where we could take advantage of the movements that we anticipate. All right. Next, we want to discuss manipulation profiles. Following a period of ranging market conditions, manipulation profile might emerge. So as you can see, we have a range here. Um, Manipulation profile is essentially price movement below the range or outside of the range, and then that signals a bottom after we show confirmation that we will continue towards the opposite direction. Uh, Typically, liquidity is extracted from both ends of a range, and price action is manipulated before expanding in the opposite direction. So typically, we'll have some sort of movement where it breaks the top of the range, and then we have the manipulation leg downward here, which you see, before we have any sort of confirmation that we're going to go upward. This part of the graphic illustrates it um, in a bearish example. So we have the range. We have a moment where liquidity is extracted below and then above. So if you look at the bullish example, we have liquidity extracted above and then below. This is below and then above. These images can guide you as you're looking through the charts as you get familiar with manipulation profiles. The right side of the graphic actually shows a little bit more in depth or shows more details. So you can see confirmation is what we're waiting for after the manipulation profile. And that comes in the form of a change in the state of delivery or order block. We'll discuss that uh, in an upcoming chapter soon. But this is the basic structure of a manipulation profile. You have a range, then we have liquidity being extracted from both ends of the range. So in this case, this is up and down. And then we have a sort of confirmation point before the expansion upwards. Again, that's illustrated over here. We have the confirmation point before the expansion downward after the manipulation here. So if we take a look at that on the chart, sorry, I just had to clear some old drawings there. If we take a look at that on the chart, we can see that we might um, it might not take that long to actually come up across a manipulation profile. So if we're looking to see what we can find, just these things don't come up all the time, which is why we wait for the setups, so that way we can uh, only participate in high probability conditions. So you can see a manipulation profile here. Once you spend some time on the charts looking for manipulation profiles, you'll be able to spot them a little bit more clear. But the way I can tell is we have a high and a low here. So we have this high and this low, which created this range here. And then as you can tell, price. Let's zoom in. Okay. All right. And then we have our confirmation. Let's try to position this so you can see it clearly. So I'm going to get rid of this middle line here. Get rid of this middle line. We don't need it. We're going to make this the range, and we'll make this red as the manipulation point. There's confirmation. Let's move this a little bit more. Okay, so we can see it clearly. That's what you're looking for. So if we were to dig a little bit further, as far as looking at maybe when the manipulation point might have started, we can see here where price broke below. Let's make this one dotted so we can tell the difference. And then we had here where price broke above. So you can clearly see liquidity was extracted below at this point. I know it's a little bit tough to tell, so we'll make this a little bit more visible. We'll take off the background, we'll add a border, and we'll make it yellow. Let's see if that works. I might have to make it a little bit thicker. I'll make it orange, and then thicker. That's better. Okay, there we go. So we take that line off. So we can see how liquidity was extracted. If we look a little bit closer, if we zoom in, you can see what I mean. We have this low here. Liquidity was extracted below when it dipped and crossed this line into this area. And then liquidity was extracted above when the manipulation profile was formed. And then we have confirmation here at this change in the state of delivery. And ideally, we would have entered here on a short position, betting the price would go down. Now, this is very easy to spot right now that price has already moved, but when price is, when the action hasn't formed yet, like for example, if we go to current price, it's easy to assume that this might be a manipulation range if we disregarded everything else. But there's other factors. So you never want to enter at the during the manipulation range. We don't trade during the manipulation range because price could continue to go further down, and we may be wrong. So, for example, if I were to think because maybe price past this point, and then we have this range here. Sorry. Okay, so we can get rid of that. And let's make this back to the red color background. No border. Okay. Oh, it's gray. Sorry. This is the range. So gray. All right. So we have the range, and then we think maybe this is the manipulation. The problem with this is if I enter here on a short position, let's say I think this, I'm going to use this as the stop loss. If I enter here, and again, we'll talk about making targets, but I'm just going to make a generic target here. Let's say I was going to target that position. We'll talk about targets eventually. But like, let's say this is what I'm thinking. Let's say I think this is the range and I think this is a manipulation profile. So I'm going to enter here. First of all, we haven't even waited for confirmation. If you can tell on this graphic, confirmation is uh, when price retests the order block, which we'll discuss in future chapters soon enough, actually, I think in the chapter after next. But right now, this isn't enough to know or to form a bias. There's a lot of other factors to consider. So if I were just to take what I see and enter a short position and bet price was going to go down, we still have yet to wait for the test. This is actually what we want to see. So we don't want to enter here. We want to enter here. If that makes more sense. So we want price to form the manipulation profile, form an order block, and then retest the order block. And at this point is when we enter. So the idea is to let price move, and we don't enter yet. So you can see here, we'll do a dashed line. So we don't enter here. We're just watching price. This is our plan. This is what we're waiting for, basically. And then we come in and we enter here. So let's finish off the illustration. We enter here. We don't enter here. So this is where we want to put in the short position. We want to enter the short position here when price tests the order block. And that lines up with our strategy here, or the tactics that we use when anticipating the end of the manipulation profiles is illustrated here. You can see this is exactly what we're talking about. And we'll do one last line just to finish off the illustration. We'll do confirmation. There you go. So this is what you want to be working on for now. Of course, we still have a little bit more to discuss with market profiles, but uh, if you were at the point where you're trading on simulated accounts, then at this stage, you would want to look for entries that look like this. Okay, so I just want to take a few moments to go over manipulation profiles in detail. Um, the way we operate as traders has to be logical. So we use a framework of various concepts to keep ourselves aligned with the market and try to take advantage of certain movements or certain conditions. So the manipulation profile is one of those conditions we look out for. Um, so that way we can find a good position to enter. So uh, we like to think in terms of sequences when it comes to market profiles. We'll go further into advanced market profiles or market profiling in the next chapter or in a future chapter. This whole chapter is really just an introduction to market profiles in general. But if we're looking at specifically just manipulation profiles for now, um, this is the logic behind the concept. So we have a range, and then we have what we call a manipulation profile. And then we have the subsequent expansion towards the opposite direction. That gives us the entire manipulation profile. There is a bit of anticipation involved when entering the position because obviously seeing this and realizing it at this stage after the expansion's already been created doesn't do us any good. So you'll probably see this scenario play out a lot or even fail a lot when you're looking at the charts. There's other conditions or other things to consider that we'll be going over in future chapters, um, which combined with market profiles and other concepts can help you build uh, confidence in a trade setup. There's a term called confluence. So we just want things to align together. Um, you want to avoid trading ranges and retracements and manipulation profiles, especially early on. Um, the best conditions or the best setups are typically uh, at points where we would expect expansions and reversals. That's where the highest probability setups tend to occur. So a few things just to kind of point out with manipulation profiles. Um, they tend to emerge following a period of market uh, conditions where price is ranging or if it's stuck between highs and lows, which you can see here. We have the manipulation profile after the range. Um, uh, Liquidity is extracted from both ends of the range, and price is manipulated before expanding in the opposite direction. So we'll have a sort of upwards and downward movement in this case here, since we're looking at a bullish scenario. So we have some key points to look at around this point in the range to identify if liquidity has been drawn above and then below. If we can determine that, that might lead us to believe this is a manipulation profile. And then, if you remember from a few moments ago, we discussed waiting for confirmation at the order block or the change in the state of delivery, which we'll discuss further uh, later on down the road. These are just a few things that I wanted to point out. A very important thing to remember is position should not be entered during manipulation, uh, because you can't place a stop loss accurately. You should only take a position after confirmation in the subsequent expansion profile. You don't want to try to catch the bottom. We're not trying to catch, and when we're trading, we're not trying to enter at the lowest point and exit at the highest point. We're trying to take advantage of a small portion of a larger move. We don't want to let greed take over, because then you end up like most others. Another thing to note about the sequence of things when it comes to manipulation profiles is manipulation profiles won't lead into a range. So when looking at the sequence we have here, you can see we have a range, manipulation profile, then expansion, or range, manipulation, then expansion. That's the whole profile. We won't have a range, manipulation, and then a range. We won't have a range, manipulation, and then a retracement. We also will not have a range, manipulation, and then reversal. When it comes to the manipulation profile, we're specifically expecting a range, manipulation, and then expansion. That's if it is a true manipulation profile. Of course, there are scenarios where price will not expand in the direction that we are expecting. We consider those low probability conditions. If we're taking entries that align with our trading rules. So if you have a setup that's valid, if we're looking at the concepts that we've gone over and you enter in a legitimate position and the trade doesn't go your way, that's what your stop loss is for. So in this case, if we were to enter here, our stop loss would be at this swing low. And if price did not go up, and indeed, or in fact, it went down below this point, then we would have an order set to automatically exit. That is part of the game. You will not always be right. But I just wanted to explain that there is a sequence of events that we expect to happen during a manipulation profile. I would like to review one last thing. Um, in a few chapters, we'll go over key levels, which are very important. They work hand in hand with market profiles and other concepts, so we can know um, where or at what price we might consider entering a long or short position. Uh, Ideally, you would integrate market profiles with key levels and other protocols. CRT is candle range theory. It's a method of marking up candles, specifically just using uh, the open, the high, the low, and the close of the candles as levels. So you have the high and the low. of certain candles creating a range, and then you have uh, other candles afterwards representing different phases of the market sequence. I know that may have sounded like a bit much, but trust me, we'll get into all of that later. Just keep in mind that there's a few protocols that we'll be going over. It's protocols and concepts. That's what we're learning. But I'm revealing them to you over time logically. So the things that we're going over can be used together as we discuss them. So in this case, we're talking market profiles. We'll go over key levels um, in the next chapter. But right now, I just wanted to show you a representation of how market profiles would work with key levels. So we have a range, we have manipulation, and then that manipulation hit the key level. We would wait for confirmation. And at this point, let's say we didn't see this expansion yet, we can see already we have a range manipulation that hit the key level. So then we're gearing towards an expansion to the opposite side of the manipulation. In this scenario, we have a range that's testing a key level, and then we have an expansion. During our chapter on advanced market profiles and market profiling, we'll go over when you can expect the different scenarios to play out. There's still quite a bit to discuss in the future, but keeping it simple for now, we learned about market profiles. We'll soon discuss key levels, but I hope you take what we have been discussing in practice. Um, Looking at the charts, maybe trying to anticipate where things might go. In this chapter, we discussed the Model 1 entry briefly. Uh, so you have some idea of what to target, or maybe what a basic trade setup might look like now. I would suggest using a simulated account on TradingView. If you have any questions, you can always send me a direct message. Just let me know specifically, hey, what's going on with the trading? I have this question or such. I'm here for you. It's Trading is the easiest, hardest thing to learn. So once you, or it's the hardest, easiest thing to learn, however you look at it. But in the beginning, it's tough, but once you get it, it kind of clicks, and eventually, you're able to kind of just play game essentially and compound the numbers. So over time, um, it it becomes meaningful. But that was the chapter over market profiles. Um, I hope you at least enjoyed the content. But if you have any questions, let me know. I'll see you in the next one.